Hey guys, and welcome back to yet another weekly market breakdown. This week we're already in week 33, and as always, let's kick it off with Euro NZD on the weekly. Here, firstly, let's recap what happened last week. A position that I gave out last week, market video, was a sell from this last week's high. The reason for it was this weekly key level and this 38 EMA. I had my sell position set on the 38 fib, as I would rather enter early and have a wider stop loss, as this is based on a weekly time frame, than risk not entering the position and losing out on potential profits. That position for me last week did 120 pips, which was a solid 2 and a bit percent. This week, what I see on the weekly, the only weekly trade that I have is this buy position based on a retest of this key level and a retest of the 23 fib. This is at the moment still very far out. As you can see, this is 200 pips out. So I'll definitely be keeping this buy for the upcoming weeks, as I doubt that it will get triggered in this week, but most probably the next coming weeks. Then moving on to the daily. This is where most of my opportunities do come from. Here on the daily, here as you can see, there's a possible third touch, hopefully coming up this week, right about here. This on the 4 hour is paired with a, here marked by this red zone, a double top, which is a great couple of confluences to have, especially when you look at this position based on the 4 hour time frame. Then what could happen is, after price rejects this area, it could move its way down to this buy zone that was marked out on the weekly chart. This is on the daily paired with a 38 EMA. 38 fib, my bad. And what could happen is price could reject this area, this third touch, move its way down to this buy zone, reject this 38 and key level, and go all the way up to the negative 23. This is obviously the perfect scenario. This upper sell is only based off of this fib, so if this fib does manage to stay respected, especially at the 38, as I'm aiming for the negative 23, if the 38 is respected, then I'll definitely be keeping this sell. If price does break and close past the 38 fib, then I will be removing this sell position. Moving on to the 4 hour, here as you can see, this is the same short from the daily with the double top as I just mentioned. Here I drew a temporary trend line, as it is at the moment not yet confirmed. I need to wait for at least one candle closure past a lower high to confirm it, as for example this candle could right now end up closing way above this temporary trend line, which obviously I would not be taking a trade off it right now, as price could make its way up higher, not confirming the trend line that I've drawn now. So this trend line is only confirmed after this candle closure. I don't think I will be trading this, but this is just the most recent trend lines that I see at the moment. Obviously here's another trend line right here from the bottom. This is extremely far away, as this is also a daily trend line. It would be these two. Yeah, I connected these two points, and that is still far-fetched, but this is still a solid trend line to take, and I'll definitely be taking a position off of that. Here there's another possible third touch in this area. However, as when I'll be breaking down Euro Odd, I'll show you that these trend lines I I only like to take them with at least 2 confluences, as they are quite steep in my opinion, and they tend to be broken and retested most of the time. That's all I have for the 4 hour on Euro NZD. Moving on to NZD USD on the weekly. Here, as you can see, I only have at the moment one buy position. This buy position is actually based off of a daily. Here, using multi-confluence, a multi-time frame analysis, as you can see, this daily buy position is backed up by a weekly 100 EMA. The daily buy is based off of still this key level. Mostly what I see with NZD USD, as you can see here, it bounces once and then bounces multiple times around about a key level, breaks it, retests it, and then continues to bounce around that key level until it is finally broken. Usually here, as you can see, there are 1, 2, 3 clean rejections of it. Maybe actually even 4 rejections, and on the 5th touch of that key level it got broken. At the moment, this current key level that we're on has had 1, 2, 3, now doing its 4th touch of this key level. At the moment, this key level touch is also backed up by a 3rd touch on the daily. This was covered in previous videos, as I've been anticipating this. Unfortunately, this was missed as it happened in the morning before London Open, so I'd rather play it smart rather than getting into the position which does not fit my entry criteria. Here, as you can see, there is this buy on this key level lining up at the moment with a 50 EMA on the daily. I doubt that this will still be valid, as this as price can still take a couple bounces off this key level before it actually fully breaks it. I'll definitely be wanting to short this key level in this area. I'd need to see a very clean break of this key level. I'm guessing somewhere in between a daily closure of the candle, somewhere in between these 2 key levels, to me would mean that there is enough seller pressure to break that broke past this key level, and now it's gonna come back up and retest it, and I'll be able to catch a short off of it. Quickly double checking the weekly. Here, as you can see, there's not much going on after this 3rd touch that did happen 3 weeks ago. I had it covered in my first market breakdown. Here, as you can see, this is a very nice trade to take, as after that 3rd touch, this candle closed as a massive shooting star and did continue its way downwards. Last week's video covered this buy from this key level. As you could see here on the weekly, there was a massive candle break, a solid candle to the upside past this key level. It retested it and went all the way back up. You can better see that on the daily. Here was the retest. It retested it and did 100 pips up. Usually for these, especially for this pair, I'd be placing a 30 pip SL, so this was a 3% opportunity that could have been taken. On the 4 hour here, as you can see, there was this trend line that got broken and retested. I did manage to catch these 30 pips and already close myself out of it, as my TP was set at this key level. This is a solid trade. Unfortunately, just not in time to cover it in the watch list. Here, another possible pending would be another 3rd touch in around about this area. Obviously, at the moment, as you can tell, it's still quite far-fetched, as we are 80 pips away, but nevertheless a solid opportunity for you guys to draw it out, and for sure keep it in mind and have price alerts set. Another possible pending that I would consider high risk, but could take on a smaller percentage, would be a second retest of this trend line paired with a 38 fib and a 50 EMA on the 4 hour. As you can see here, there was a solid break of this 50 MA on the 4 hour, and previously every single time that does happen, you get a solid break of it, retest, and it continues its leg down. Same way to the upside, it breaks the 50 MA, retests it, and continues for a solid leg up. So here, if price does manage to align itself in exactly this area, which is on which will actually happen in 2 days, the 11th of, oh no, my bad, tomorrow, the 11th of August at around about 7 to 11, that candle, if price does manage to line up in that area, then I'll definitely be taking a short from there. Around about 0.662 area, which is also quite a solid round number. That's it for NZD USD. Moving on to Euro Odd on the weekly. Here you can see the same scenario that worked out last week for Euro NZD, a weekly key level and 38 fib. This is definitely a sell that you guys should keep in mind and place it as just place it and forget about it, as this pending will definitely trigger in at some point in the near future and will definitely do its TP1 and TP2, as this is a weekly. Further, that's the only pending that I do have from the weekly time frame. Moving on to the daily, here this buy that was covered in the previous two videos is and stands still valid, as it is a solid key level break. The retest will still come. I don't doubt that it's going to work out. That's why I'm still keeping this pending, and that's at the moment all I see on the daily. Let's move on to the 4 hour, where it does get a bit more interesting and a bit more knowledgeable. Here as you can see, this trend line kind of looks, actually, if you remember the Euro NZD trend line, it is quite a steep trend line, and usually here, even with a solid two confluence trade, here there was a third touch and 50 MA in this area, it still broke, came all the way back up and retested it, and already did TP1, almost TP2. Here, usually these very steep trend lines, they usually they definitely work, but they only work for a retest of them, as they usually do not hold. Here, another trend line that I do see is this one. There could be a possible third touch sell off of it. Let me quickly mark it out by this purple area. Here, if price does align itself in this area with this third touch and key level, there's definitely a sell possibility. That does not work out higher up here. The highest point on my 4 hour chart is this key level right here, which is also a solid short to take. Even though it is a one confluence, it is still the highest point on a 4 hour time frame, so it is still I'd consider it a medium risk. And lastly, here as you can see, I drew another trend line that is also relatively steep. This trend line I also could be used for a third touch, but I would definitely be reducing my risk on it, so I would not be taking this for 1%, but rather a 0.5% trade, as it could work out. But I do not see this this pending going for many pips, as as my bias for this pair is a break and retest of this. The perfect scenario would obviously be for me a touch of it for a solid 30 pips up, a break of it somewhere about this point. This key level could also be used for a break and retest, and for price to come all the way back up to actually third touch in this area, for this trend line to have a third touch in this area rather than somewhere up here, as that will be a double trend line confluence, which is very solid in my eyes. A trend line crossover I would even be taking for for more than 1%, close to 2 actually, as two trend lines are a very strong confluence, and those are trades that I do prefer to take. So that was it for me this week. Osiris out. Have a good trading week, lads.